Hey guys, so we got some CPE numbers out today. This is gonna, add a little ganar to the. What the fuck? Am I echoing? Hello. All right, let's cruise. Yeah, we got the CPI numbers today. Even though they've been telling us there's no inflation, guys, there's inflation. There's terrible inflation. I told you guys when you elected Hillary, there's going to be the most stupendous inflation in the history of China and America. And now we're seeing it. Oh, man. So we get a little bit of a rollover. Yeah, I think, in the next half hour, we're going to start getting a little Gennard. And maybe we get a little pop here. And we'll have to see what's up. I had a, nice, beautiful, stupendous long list going, and now I think what we're going to have to do is add some shorts. You can just see just right across the board, like if you're looking at if you're looking at fucking watch list life, like my current watch list. red, so we're gonna have a little bit of fun today. No get around it. So I think it's important today to just, have a little bit of longs, a little bit of shorts, a little bit of pizza. We're gonna be getting things down today. This could, and we've seen gaps before, right? This is just a pre-market move. We've seen them kind of fade back and then do other stuff. So don't read too much into it where it's not the end of the world or anything to be down 0.5%. But overall, if we look at like the structure of the QQQs, now we've got ourselves a fake breakout and a break back under, right, the old resistance spot. So failed moves are typically fast moves. So what I mean by that is when you have a failed breakout or a failed move over highs, failed moves are fast moves to the downside. And that's why I think, we're going to have a couple shorts today, probably a couple longs. One thing I have noticed in this market is that, when you do get the flushes to the downside and you're kind of like short life, that never lasts long. Like it never lasts very long, right? Like you're talking 1 hour dump, 2 hour dump, and then, things start to grind back. So like when you get a day like this, you're going to have to be able to play both ways, meaning, we're probably going to have to be catching some shorts at the open after maybe a little bit of a bounce. And then, once we flush down, my guess is that we start to squeeze and, we just grind our way back higher. We've seen this before, if you're looking at even like a couple days ago, right, you gap down and, you fart around for an hour and then you kind of just grind your way back up. And so you get, an hour of grind and then you kind of grind your way back down or whatever. But we'll have to go both ways today, which is still very fun. But let's go into just kind of a couple stocks that I think we can use for shorts. And what I like to do is like when the market gets a little bit nasty, we stick with, things that are liquid, that have range, that, we just have a history of making money on, that have like some type of daily chart that's either too extended or about to roll over. And we'll look for some entries on it. And I think the market's going to like crash today or something? No, I just think we're probably going to get a little bit of weakness. We saw some yesterday too at the open, right? Like, we have seen that. And on top of that, like if you really look at market breadth, your T210 indicator, market breadth sitting at like 45%. We did have a little pop yesterday, but, overall, like market breadth has been declining for pretty much the whole year. Well, market breadth is essentially right, the number of stocks that are showing good charts out of a whole, right, out of the universe of stock market. So you have 45% of stocks above your 40-day. You've got, if you're looking at T21087, 61% of stocks are above its 200-day moving average. So like the market's at highs, right? Like if you're looking at anything like see the SPY here, right? You're at pretty much highs. Dow Jones, you're at highs. QQQs, you're at highs. But if you actually look at, right, the overall structure of the market, of what's happening underneath the hood of the market, if you take out, right, your Amazon, your Googles, your Microsofts, and your Apples, and NVIDIA, the rest of the market has been, right, in terms of how many stocks are above its 200-day moving average. First of all, if all indexes are at highs except the IWM, I mean, this should be like, from past experience, this should be in the 80s, like every stock, because this is not the 9 EMA or something, right? Like a short-term moving average. This is your long-term, slow grinding moving average, right? Your 200. I mean, every damn stock should be above that. Like in a real hot market, there are no like real bad stocks. You know what I mean? Like just bear flags end up getting bought, so on and so forth. So like that's something to just kind of keep in mind of. So if like you're swing trading, if you've been swing trading this year and you're like having a little bit of trouble, you're like, man, what the fuck? Like, you know, my swings aren't working out as well. Unless you're just playing kind of those like pump and dump small caps or whatever. If you're having a little trouble on your swing trades, that's one of the reasons that the overall market breadth is just down. Now, let's just go into maybe some names that we could trade today. I think to the short side, you know, this Peloton, we cut a decent short on this yesterday. It's got good range on it. You can see this thing's just sitting on a cliff right there. Sitting on a cliff. I think, you know, if we re-break back under this 20 SMA here, it's about 118. We take this piggy down. Crowd is also kind of just sitting on a ledge right now, right? You've had this huge run from 170. I think this part of this move started too with the, right, like a good old fashioned Motley Fool pump, which, you know, they seem to be able to do them real good. I think this one is another one. We could take this thing down. We got room down into really 250, 240s. Yeah, you can already see this thing's kind of rolling down. I think that's a potential short. This docu, you can see yesterday was actually a telltale. Yesterday, you had this like one candle, just a little mega penis pump, boop, and then deflated like instantly. That's telling you something right there. Like that's like a holy, because the market was okay yesterday. So you got like this nice $10 push, and then it just kind of rolls back over. Man, like that's nasty right there. If this stock loses its 9 EMA, and I actually do like this company long term, and I do think this thing will push over 300 in the next, you know, couple weeks probably, and continue on because it's an earnings breakout. Its next earnings are not till 9-2, so you got a couple months. But it's an earnings breakout, so that's been working in this market. So I do think long term this has a move. But if you really think about it, it's doubled. I mean, anybody ever use DocuSign? You know, you email somebody a PDF and then they sign it. Right? Fuck. Right? This thing's had a huge run. It's up a double in the last month. Why not show it what a little American justice looks like? Now, I don't think we load up into this. If you really look at the levels, you know, I would only consider this under 285. That's also where your 9 EMA is. That's the spot right there. Okay. Now, look, if the market starts to rip and bounce, sometimes these inflation numbers and, you know, shit like that doesn't mean anything. Sometimes they do, sometimes they don't, right? 285 is like a good sweet spot here. If we break under, it doesn't mean we take it, but we start to look at a shorter time frame. We start to see if it starts to build there, if we start to get anything, and then we'll take a little goose and a gander on this bad boy. At that point, like we'll have ourselves a good old fashioned, right? A good old fashioned pizza party. If that happens, if you lose 270, 285, you know, you got down to 280 before you really run into any support. I wouldn't really consider this little thing right here. So I wouldn't even consider that support. It's just it's just a wick, right? So, you know, we really have like really into this zone over here. I wouldn't be surprised to see us test a 20 SMA. The reason I say that is because typically, like when you have a trending stock, so anytime you have a trending vehicle, we should say. So when you have a trending vehicle in the beginning of a trend, like you'll be kind of riding up your 9 EMA. As the trend slows down, as the velocity of the trend slows down, and like you can see here, like see how your 9 EMA is like starting to flatten out here. So what that says is like as your trend, your short-term trend is slowing down. It doesn't mean it's ending, but it's slowing down. That particular velocity is slowing down. It means that you need deeper pullbacks. You need something a little bit more significant. So as this is coming, like, a test of the 20 SMA or something along this end is not out of the question. If you really think, like your 50-day moving average is at 235, so you have quite a bit of room. Like this is a very, very extended name. You've got a little bit of what we'd call, I wouldn't say it's a reversal candle, but in the trading books, they call this like a little hammer candle or something like that. Candle names are stupid, but whenever you see this little like middle finger, that little nub sticking out of a breakout, that's usually a telltale sign that you've got more weakness coming on this particular type of name. So I think that's probably top of the list if we start to get a little bit nasty. Now, look, the market has been just pumping and pumping and pumping anyways. And there's a shot that we don't see any type of weakness. Like, maybe we flush down for 20, 30 minutes, and then you just kind of grind your way back higher. As we know, the primary trends have been higher. But if you think about it, in the last like 10 days, the S&P 500's up 7-8%. I mean, that's quite a big move. If you think about like historically, market moves on average like 8 to 9 to 10% a year. We've been spoiled the last couple of years. Like you guys should be, by the way, making fucking shitloads of money and you need to stack it. I mean, shitloads of money and you need to stack it. The reason is that historically the market does move just 8, 9, 10% a year. And then you have to grind your gains out from that. We're having 7, 8, 9, 10% moves in a matter of couple weeks. That is not the normal in terms of historical. It is the normal of the last 2 to 3 years, but it is not the norm of historical returns. So we are very, very extended also if we're looking at, like a 20-year basis of how much a market really can move in a matter of a month or 2 weeks or so on and so forth. So having some weakness, coming down into this zone, that ain't out of the cards here. That is not out of the cards here. And we are pretty extended in the last 10 days. We are a little bit overbought. I believe we got a 92 stochastics on the SPY. We got 83, on the QQQs. This is hot. All right. So let's stick with just the big boys. We got Docu, we got Crowd, we got Peloton for potential shorts. If you need like something a little bit more spec, this space has probably still got room to fall. This was a heater yesterday. This was a heater. This is like your classic sell the news event. I mean, this type of play never ceases to work. You can do this. I mean, I think we took this thing right off at the open on the short. You can do this type of setup, by the way, like, get that quick morning spike in reverse. You can do that like when biotech, for example, announced good news, but it's already expected, meaning if it runs up in advance, and then like you say you have some biotech company and they're like, hey, we've got FDA approval of this, drug. A lot of times people say, oh, that's a buy. Well, you have to look at the previous action. If the stock itself was running from $10 to $100 in anticipation of the news, and then it gaps up like just real small, right? Like something like $1 or $2, that's your telltale sign. Like, because usually, right, if it had some really good news out that was unexpected, the gap would be like 20, 30, 40%. So if the gap is just like $1, then that's telling you right off the bat, like that thing's going to get sold off. It's 95% time it's going to sell off. So you just wait till it rolls over and goes green to red, and then you can take them down. I do think probably you've got maybe some room down into, this type of zone. It was $16 before, the push was on. So you got a little bit more room here. But I don't think this is the easier trade. Yesterday was the easier trade. It's going to have the SSR on it. So with the SSR on it, it's going to trade a little bit more herky-jerky. And you guys probably noticed yesterday, the fucking margin on this thing's been pulled, meaning, they don't let you trade as many shares. They don't even let you trade as many shares as cash in your account, which is a big, hey, good life, how are you? Yeah, you know what? Feel free to just email me, or you can give me a call, 517-974-1480. And yeah, just hit me up. I'll walk you through whatever you need to. That's my Sally, so don't be telling everybody. All right. Good. Now, let's think into just if the market does push to the high side, what are our favorites? I think we got to be able to play both ways. Snow had a rest day yesterday. So after this big push, it went from 247 to 273. So it's about $25 range right there. We had a classic inside day. So what I mean by classic inside day is when you have a large ranging day, right? When you have this huge range day. So 25 points is a big ranging day. When you have a large ranging day, and then the next day you have a rest day, that's usually fairly bullish. If the market holds up, this is probably top of the list for number one, a red to green on this. And then we'll see how it attacks at the highs. I think that'll be pretty good. OSTK's got a nice range break over here. Now, my one worry with OSTK, it's got two cross currents. One is that it is a specialty retail stock, right? Overstock.com. It's like a shittier version of Wayfair, right? Even though not that Wayfair is so nice or anything, but Overstock.com is like a shittier version of Wayfair. Maybe that's a bad comparison, but similar enough, right? You could Google things in there and buy shit. So similar stuff. You got a nice range break there. So this is a specialty retail stock. So you have that aspect of things. The second aspect of things, Overstock.com has some presence in the crypto space. I don't know if it's actually live yet. But at some point, they were looking to open their own crypto broker, and it was moving around, it was moving around with the Bitcoins, actually. So, see, this thing was like fucking $3, went all the way $100. When this thing cooks, it really cooks. And that aspect of it was, part of it was because, they have some type of cryptocurrency influence or business that they've been trying to put up for quite some time. If this thing goes red to green today, too, you start to push yesterday's highs, not yesterday's highs. It would be yesterday's and the previous day's highs. It failed yesterday right at its high. That's going to be a heater. I think that one, we can get a good range out of it. We had a nice rest day on it yesterday too. I think that one's going to be okay. And then the next one, these are just our kind of daily traders. And then these solar stocks also had some really good range on them yesterday. JKS had, I wouldn't say news per se, but there was an article out that said that they had the most efficient solar panel for a specific type of solar panel that they do. Now, this is a Chinese company, so you just take it with a grain of salt. We don't really know if it's a Chinese company because it doesn't say ADR, but the fact that it's called Jinko, I'm taking a wild guess to say this company is not based in Paducah, Kansas. This is probably a Chinese solar company. It's got a good range on it. They had some news out yesterday, so we need a little piece of that. We can. Now let's talk about just the news plays. In absence, guys, of trend in the market, say the market just chops around today. Maybe we get a flush, we get a pop, whatever it might be. News plays will have an order flow or a volume that will move independent to what's happening in the market. Meaning if you have a stock with, some type of fresh news out or some kind of pump in, like this thing, then whatever's happening in the general market probably doesn't matter. Like this thing is going to do whatever it's going to do, right? So now you can't chase this thing up, right, at this level. So, what you need to do is like really let this thing pull back. It may take hours. Like if you're into this type of thing, I'll leave it alone, but you'll have to let it pull back possibly for hours and then let it base, and kind of the setup you really want to be doing is something a little bit more like this. Meaning like, you may start to like, see like this stock like spikes up at the open and right, it like grinds down for like hours. Right. And then it's like really it's not till like later in the day where, you start to break out and push. And the next thing you know, right, like you're all the way, all the way back up. So if you want to play the sandbox of, deep degenerative lifestyle and you want to get into this kind of stuff, which is totally fine, then you got to probably wait it out. You don't want to, especially with a little bit of weakness, you don't want to be chasing this thing up because whoever's in this thing pre-market will dump this thing at the open. There's no getting around that. You can see this thing's already right with how much volume it's already doing, 18 million shares in pre-market. So it used to be when we used to do the gapper list, it would be like you had to have 50,000 shares pre-market to be considered, something that, we would be willing to trade. And you never see stocks even over 1 million, unless it was like, Apple had news out or something like that. And even then, like very, very, very rare. Now you got 18 milli in the pre. I mean, that's quite a bit. So, just be mindful of those things. You got this blend. So like all the old turds are coming out. See, you got a whole host of these. So what you want to be doing is see like this type of stuff. You got to wait it out. I mean, you got no choice. Like you can't come in hot on something like this. And what they're doing is they're taking these like chat rooms and Discords. They're taking the times like where they're the most illiquid. Like, now in Webull, you can trade it. Like you could trade at Webull at 4 a.m. So like what they're doing is like they're coming in hot on these things in the pre when there's no liquidity. They must be living in Europe or something. Who fucking can wake up at this time? And that's when they're starting to push some of these like real turds going. I mean, if you get enough unsuspecting people, like I guess that's just what happens. So swings. Is there earnings out today? I didn't see it. Man, this thing where it trades really thin. I normally would be all about this because it's got a nice range break. I think today we're going to need a little bit of liquidity. I'd actually rather trade one of these fucking turds because at least they'll have some liquidity in it than probably get involved in Sohu. So you can see a lot of these kind of MRN and stuff. I think we stay away from these today. I see, you see, we all see ice cream. Do you guys remember that from when you were kids? I see, you see, we all see ice cream. That was nice. Man, being kids fun. Good. Greystone Doji. I don't know about that shit. Junk. Okay, so there's not much on the PRs unless you're into those small guys. MDLA down 20%. Imagine being the fucking piker that I see. This stuff brings the worst out of me. The person that bought here is not a piker. He's an unsuspecting human who has been bamboozled. Imagine just waking up and seeing, you're like, I'm going to be buying up here for a gapper. You're going to be down 20% off at the open. That ain't right. See all these are probably all due for dumps. C-pop, come on. Junk. AMC, keep an alert on AMC around 37. You may get a small bounce there. Small bounce. This is topped out at this point, most likely. it won't, it's never going to be, they're not linear, right? So it's like, it's not going to just roll over down, you know, into 16. It'll pop down here and then you'll have a dead cat bounce to like 46, 47. And then you'll have this like ebb and flow that comes down into it. But the overall, it has topped out. Junk, 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 junk. Stay away from this kind of stuff too. Like this thing's probably due for a bounce, but I mean, do you trust it? Do you love it? Pass. Newegg, yeah, you know, out of all of them, probably Newegg is the one that's actually sitting on some support. You know, you have your 9 EMA like sitting right at 35. There's a shot that this one, right, the OSATs, you can't chase them up, but like at least Newegg is sitting on some support. Now the spread on this is so Gennard, like you'll have to, like if you trade something like this, it's probably due for a bounce. Only if the small caps are all going. It's due for a bounce, but the big hairy butt of it is like you're gonna need a lot of damn work to get this thing going. And you can only trade it like really small, right? Like you can't come in so hot on this thing. Yeah, you can't come in hot on this thing just due to the fact that the spread is going to be incredible, and then spread could be $1. The liquidity is going to dry out. If it starts to push, it starts to push. But you know what you have to do is be like a third size that you normally would, and you let the range play itself out. So you don't like get elongated gains from stuff like this. What you do is you trade it smaller and then let the range play out. You know, position sizing is one of the most important things that you can do as a trader, meaning like a lot of times you see something that's like flying around and you think like, holy shit, I should be in really big because I'll make it big on that. No, you reduce your size on it and let the range pay you. That way, you know, you don't have to put that much dollars into it. That's usually the easiest way to kind of trade these. The hardest way is to fucking be balls deep on this thing, and then like you're like, oh shit. Like, oh man, here we go.